IFRS 13, fair value measurement. We've talked about financial instruments classification and measurement, expected credit loss, and just recently, hedge accounting. In all those three items, we talked about risks and we talked about fair value. This time around, this accounting standard, IFRS 13, consolidates all the fair value measurement accounting rules, policies, and guidelines. For most of which, it defines what fair value is as well as the required disclosures. So, when you talk about fair value, isang accounting standard lang. Kailangan mong titingnan kung gusto mo malaman how fair value is calculated. Pag gusto mong malaman when is fair value used, you go to the respective accounting standard. So, when is fair value used for financial instruments? Look at IFRS 9. How is fair value calculated? You look at IFRS 13. Now, IFRS 13 likewise provides or sets the fair value framework, not just for financial instruments, but even non-financial items. It also provides a fair value hierarchy. Kanina po si ECL, di ba? May stage 1, stage 2, stage 3. Si IFRS 13, meron siyang level 1, level 2, level 3. And we will highlight later on what are the different levels. That hierarchy is driven by the inputs as well as the valuation techniques. To cut the spoiler alert, fair value hierarchy is a measurement of objectivity. Level 1 is the most objective, level 3 is the most subjective, and we will illustrate that later. Okay, how do we define fair value? Fair value, IFRS 9 defines fair value as the price, a number, a figure that would be received to sell an asset, meaning exit price. I have an asset. If I want to convert it into money, how much? What is the price? That is fair value. Or a price that will be paid to transfer a liability. May utang ako. Magkano ba kailangan ko ibayad para lang ma-terminate ko yung utang ko? Again, exit value or exit price. In an orderly transaction, meaning in the normal course of business as usual, in the circumstances do not influence materially what that price would be. Otherwise, it's not fair value. Hindi siya fair. Fair lang siya if it is in the normal course of business. Between market participants, ang assumption dito, authorized, and anong term doon? Hindi naman knowledgeable per se, although that is a given, but capable and competent to implement the transaction. Kasi nga, naiintindihan niya what is the effect of entering into such a transaction. At the measurement date. So, we talk about fair value, but fair value changes over time. So, fair value is whatever is relevant at that period of time, at that point in time, at measurement date. Fair value is the price that would be received by the holder of an asset if they sold it, or the price that will be paid to extinguish or transfer a liability in an orderly transaction between market participants at the measurement date. Sabi ko nga, IFRS 13 coverage niya is not just financial items or financial instruments. It includes non-financial items then, and even non-IFRS 9 areas. IFRS 9, alam na natin yan, debt instruments, equities, derivatives. And they have rules and provisions on how each is calculated or estimated. Other accounting standards include IFRS 2 on equity-based compensation, on IFRS 3, business combination, and even IFRS 17 on insurance policy. Although later I'll highlight under IFRS 17 ano yung totoong focus ng IFRS 17 versus IFRS 13. But mostly when you talk about fair value for these types of financial instruments can be seen under IFRS 13. Apart from financial items, kasama din dyan non-financial items. Non-current assets for sale or discontinued operations under IFRS 5. Nandyan yan. Property, plant, and equipment accounted for under IAS 16. Pag kailangan malaman yung fair value using replacement cost methodology or approach, na kay IFRS 13 yan. Employee benefits under IAS 19. Impairment of assets, calculation of cash generating units, nasa IFRS 13 yan. Calculation of fair value of intangibles, such as trademark, copyright, or patents. IAS 40, investment property, how land and building is calculated under the fair value approach, na kay IFRS 13 yan. And then dyan papasok yung appraisal values, calculation of cash equivalents, replacement cost. Even agriculture under IAS 41. Nandun din yan kay IFRS 13. Again, IFRS 13 answers the question, how fair value is calculated. When fair value is used, you go to the respective accounting standards. So for financial instruments, when is fair value used? IFRS 9. How is fair value calculated or estimated? IFRS 13. There are three approaches that are allowed or observed under IFRS 13, especially for financial instruments. You have market approach. Ito yung you look at the market transactions involving identical or similar assets or liabilities. Cost approach deals more on the amount required to replace the asset with equivalent service capacity. So frequently referred to as current replacement cost. Income approach is looking at the fundamentals, the future amounts of cash inflows and outflows that are generated or by the asset and then converted or discounted it back to a single present amount. For financial instruments under IFRS 9, ito yung dalawang approach that we use. Si market approach, when you're into stock trading, yan yung technical analysis. You look at market movements, market comparables, and trends. Si income approach, yan yung fundamental analysis. Let's look at the two. Market approach, you look at comparables, multiples, or even most recent prices. If it's a listed stock in the PSE, Philippine Stock Exchange, just look at the most recent close price. That's your fair value. When we talk about comparables, one metric will be price to earnings ratio. You have price that's available in the market, earnings per share that's also available in the market. You create a price earnings ratio, then project that ratio to the company you're trying to value. And if you already have identified beforehand the earnings per share, then you can work your way back using the price to earnings ratio to get the fair value. And the market approach answers the question, if I buy an identical or similar asset, how much should I pay? Or if I sell an identical asset, how much is the price that I could get? It uses prices and other relevant information that have been generated by market transactions available from and observable from the market that involve identical or comparable assets. Kasi nga, kung meron kang market information about the asset per se, use it directly. Pero kung wala kang available information, you can use most recent market transactions as a proxy to project and estimate this particular asset's fair value. Let's have an example. The balance sheet says the total assets 100 million, funded by 70% debt, 30% equity. Revenue is 50, net profits is 15. The stock price closed at 45 pesos per share. If there's only one share, the price to earnings ratio is 45 divided by 15 or 3 times. If the company you're trying to value has an earnings per share of 2 pesos, using the price to earnings ratio of 3 times, you can work back the projected estimated fair value of that asset. 2 times 3 equals, sige, labas niyo yung calculator niyo. 2 times 3, 5 ba? 6. So the fair value is 6 based on a market approach using comparables. The income approach looks at the fundamentals. You look at where cash flows come in and how the business will grow over time. So the net profits over time gets closed in equity. The income approach or discounted cash flow approach answers the question, if I want to realize the promised future net cash inflows of a particular asset arising from either holding on to it or selling it in the future, how much should I pay? Or if I have this asset and it's generating this cash inflow in the future, what is the price I should be willing to sell it? The income approach estimates the fair value by discounting future expected cash flows, net of expenses, of an investee to a present value at a rate of return or discount rate that accounts or factors in time value of money and riskiness of the business or the investment. Under income approach, there are 5 major valuation elements. The first is the cash flow source themselves. Is it through earnings? Is it through pure revenues? But usually it's earnings. The next component is time horizon. How far into the future are you going to project future cash inflows? The third component is growth rate. From a starting point of cash flows today, what is my anticipated growth rate of this particular cash flow source? The fourth element is the discount rate. Once I've projected the cash flows, let's say for the next 5 years, what is the weighted average cost of capital that I can use to discount it back to its present value? The fifth element, which is relevant for equity instruments particularly, would be your terminal value. Terminal value is all other cash flows that will not be, that are to be received beyond the time horizon you projected. If this were a debt instrument, ang terminal value mo would just be the par value or the principal amount. Which is, for example, if it's a 5-year loan, ang time horizon mo, 5 years, cash flow mo would be coupon plus principal at maturity. Yun yung termination value. Pero if it's an equity instrument and you project the cash flows to be coming from future dividends to be declared, and you project for the next 5 years, equity instruments are infinite or perpetual versus a debt instrument that has a maturity, has a fixed and determinable portion. So, pag ang company in a going concern, you don't know when the company will liquidate. So, you have to have a proxy for those cash flows beyond the time horizon you have initially projected. Ito yung example. You can further study this with you when you have the copy of the slides, which will be shared via the secretariat or coordinator, program coordinator. The elements, so dito, we use the net income as a starting point, as basis for cash flow. And then our time horizon is for the next 5 years. The growth rate is around 11% per annum, which is pretty aggressive. And then we look at the discount rate using the cost of capital of around 14% to get the present value of cash flows for the next 5 years, plus the cash flow representing the terminal value. So as you can see, the fair value of 60 million or around $253 per share is actually ang major component niya would be the terminal value. And the terminal value actually is built on the first 5 years. Ano yung trend? Ano ba yung sustainable cash flows mo subsequent to your time horizon? There's a separate course, I think, under IFC on that helps or teaches you how to do equity valuation. So if you're interested or haven't taken that course, please reach out to the program coordinator and inquire about sister or related courses this time around on corporate finance. Okay, let's have a quick exercise to understand valuation and specifically the rules of time value of money. Now, you've heard of time value of money naman, no? Time value of money is yung P plus I equal raised to time. Principal plus interest raised to time. Yan yung compounding tsaka discounting. All true, but the quickest and easiest way for you to appreciate what time value of money is, let's do a quick exercise. I'll give you 2 options. You give me which option you like. Option 1, I'll give you your 1 month salary today. Theoretically. Example. Option 2, I give your 1 month salary 1 month from now. Which one would you choose? Option 1, option 2. Sige, kahit wag na kayo sumagot, basta isipin nyo lang sa inyong damdamin, sa inyong isipan. Which of the 2 is much better? Option 1, I get my 1 month salary today. Hindi na sa 14. Or, option 2, I get my 1 month salary August 13. Depende. Wala, MJ, walang interest eh. Wala naman nakalagay na interest oh. Yan lang ang option mo. 1 month salary today or 1 month salary 1 month from now. I get your considerations. Pero, yun lang yung choice eh. Today, di ba? So, parang, ba't ako mag-aantay? Yan, tama si Ellen. Ba't ako mag-aantay ng 1 month from now? Eh, cash na. Ayan eh. Di ba? Knock on wood. Baka mamaya yung 1 month, after 1 month, biglang, ay, hindi pala na-credit or hindi pala kaagad na ibayad. Diba? Why risk waiting for 1 month if I can get it now under option 1? There is no advantage of waiting for an additional month for the same amount of cash flows. Thank you for answering. Now, let's change the option. The choices a bit. Option 1, ganun pa din. 1 month salary today. Option 2, 1 month salary 1 month from now times 150%. Oh, galante. Which one would you choose? Option 1, now. Kuha mo na yung pera mo now. 1 month from now. No, 1 month salary now. Or, wait ka. Willing to wait ka ba for 1 month? In exchange, you'll get 50% more. Mabilis. Maglabasan ng tuloy na kulay. Option 2. Guaranteed ba yan? I'm willing to wait. Ellen, hindi ko masasagot. Kasi, alam mo bakit? That's part of the consideration. Yung tanong mo, guaranteed ba? Sigurado ba yan? It's up for you to find out. That's the point of having two options, diba? That's the risk of having to wait 1 month. Baka naman, mamaya, gino-joke nyo lang ako, sir, hindi naman talaga ito yung 50%. Baka naman scam yan. Ano to? Aaron ba to? Or Aaron? How do I pronounce? Aaron. Willing to wait. So, ibig sabihin, that additional 50% that you will get by waiting for an additional month, that feeling of anxiety, naku, baka hindi naman guaranteed yan. Pero sayang yung 50%. Ang laki na, no? Kung mag-aantay lang ako ng isang buwan, that is the time value of money. How long are you willing to wait and for how much? So, lang tayo, tangent lang tayo. Hindi ko naman po kayo tinatakot, pero sa buhay, ang pera, madali mo makalculate kung gano'ng pa karami ang natitira. Pero ang oras, unfortunately, hindi natin alam. And in business, ganun din, no? Between two ventures, you would have a bias towards projects and investments where cash flows are either guaranteed or you can get as early as possible. That's why yung mga scam, 3 weeks lang po, triple your money. Wow, 3 weeks. Pag triple your money, 30 years yan bago ko ma-achieve. Ito, 3 weeks lang. So, this particular exercise helps you to discern whether an investment offer is too good to be true. And ganun ang rules of time value of money. The longer you have to wait for the cash flows to arrive, the higher should be the compensation to make the wait worthwhile. So, between two options, mas maagang papasok ang cash flow versus the later cash flow. For the later cash flow option to make sense, it has to compensate by having an additional compensation that makes the wait worthwhile. So I hope that exercise allows you a different point of view of time value of money. So, yun ang natin. In valuation, ganun din. No? The fair value. Why is the fair value of this particular asset higher compared to another asset or previous valuation? It's because the dynamics of time value of money has changed. Not just because more demand, same supply, higher equilibrium price. That's one. But you have to look at the underlying. It's because probably this investment becomes a lot more attractive compared to others because it has a higher guaranteed component or earlier cash flow component. Yeah, thank you again for participating in that very small exercise. Sabi ko po sa inyo, merong hierarchy under IFRS 13. So, level 1, level 2, level 3. Hindi yan basement levels. Pero when we talk about fair market value, Fair market value is actually the output after considering your input going through the process. Input plus output, input plus process equals output. Ganun lang kasimple yan. Kung meron kang shares of stock, ang input mo sa mark-to-market fair value determination is the latest price. Ang process mo is to multiply that price per share with the number of shares that you're holding. Ang output mo is the fair value of the investment you're holding. Level 1, quoted prices and your process is commonly used. As what I have described, ang common way of calculating the fair value of listed investments in listed stocks is to get the latest price from the stock exchange, multiply it by the number of shares I hold, and the output is the fair value of the entire investment. Level 2, pwedeng observable yung input mo, pero hindi siya directly quoted prices. It could be market variables that could be recalculated or reinterpreted to be used in valuation. An example niyan, interest rates. You pick up interest rates to use as discounting for your cash flow. Discounting future cash flows is a commonly used valuation technique. But the inputs that you use for valuation is based on market variables. Some may have a different interpretation. In other words, the level of subjectivity increases as opposed to a simple quoted price. I pick it up, I plug it here, tapos na. Level 3 is the pinakamalalang level. Either you use your own variables na hindi observable from the market, even if commonly used yung valuation methodology mo, or you rely on market variables that can still be market observable, pero you use your own approach to valuation. Either way, either approach, you yield a level 3 type of valuation asset because the level of objectivity goes down and the level of subjectivity goes up. The reason why we have this level 1, level 2, and level 3 categorization for purposes of financial statement reporting is to provide the financial statement users the level of granularity and therefore the caution necessary in terms of understanding gaano ba karami dito ang objectively calculated ang fair value, alin dito estimate nung nag-prepare ng financial statement. Kasi imagine mo, ganyan na itsura ng balance sheet mo. Again, the left-hand side are uses of funds, right-hand side are your sources of funds. Ganyan na itsura ng balance sheet mo. And majority of your assets are level 1. Wow, level 1 quoted prices using commonly used valuation techniques. May konting level 2 at probably may konting level 3. If you're the financial statement user or evaluator, ganyan yung makita mo, medyo kampante ka na, okay, majority of the assets, the majority of the uses of funds have been deployed to level 1 assets. And I have some reasonable certainty that the management assertions, particularly the valuation and measurement assertion, medyo okay kasi quoted prices ang nagamit. Imagine, ganyan ang balance sheet mo, level 1, taas puro na level 2. In a way, okay pa din. Kasi, level 2, market variables, somewhat observable, pero commonly used valuation techniques. I can still objectively verify that the fair value estimation used by the preparer is more or less the same or close had someone else prepared the report. Now, kung ang balance sheet mo, ganito itsura. Counting level 1, counting level 2, tapos puro level 3 na. Kabahan ka na. Bakit? Kasi pag tinitingnan mo yung financial statements mo, ano tong number na to? Mapagkakatiwalaan ko ba to? Kasi puro estimate na nag-prepare. Kahit ba chartered financial analyst, CFA, charter holder yung nag-prepare. Still, from a professional skepticism point of view, you'll have some questions. Buti ko audited, pero still, the level of subjectivity increases if you have more level 3. And ganyan ang itsura ng balance sheet mo. Majority level 3. You now ask more questions. And ganon din si IFRS 13. The lower the level, from level 1 to level 2 to level 3, the more disclosures are necessary. Fair value valuation techniques and inputs, the description, the policies, the judgments and estimates, those are minimum requirements, regardless of levels. But as you move from level 1 to level 2 to level 2 to level 3, types of assets, the more disclosures you'll need. For example, kapag may level 3 ka, you have to disclose sensitivity analysis. What if mali ka by 5%, by 10%? Anong impact niyan sa libro? Anong impact niyan sa P&L? So, hanggat maaari gusto mo, walang level 3. Kasi ang trabaho niyan, dami mo i-disclose. Imagine na lang kung balance sheet mo, puro level 3. Dami mong i-disclose na information just to compensate for the additional subjectivity introduced in the financial statement.